Thanks very much, Maximo, for that very, very kind introduction. It's a great pleasure to be here. I'd just like to follow on from David's excellent points on the Nairobi Declaration, looking at more broadly at this question of disciplines and policy space. Now, policy makers in agriculture in developing countries face enormous challenges of poverty, dealing with the problems of poverty and food insecurity, with very, very limited resources and instruments. So one of the things that they really worry about is having the tools to do the job. One of the things they like to reach for is trade policy measures because they're relatively easy to implement. And so they feel a need for policy space. So we need to think about that. The WTO, of course, is trying to deal with collective action problems. I think in this context, when we look at the WTO process, what's been happening with developing countries, how has the context changed in terms of their trade patterns and policy processes, and then to look at some policy options. So policy space and collective action. Now, unilateral trade policy interventions are very attractive to policymakers. They really like quantitative restrictions because they can control outcomes, trade volumes, and sometimes they like to discriminate against particular trade partners the way the industrial countries used to discriminate against exporters of textiles and clothing. Protection for large countries can improve the terms of trade. Of course, for small countries, it's likely to have very little success in doing that. But price insulation can also stabilise domestic prices without costly measures like storage. So for these reasons, trade policy is very attractive. But these policies have huge collective action problems. They're suboptimal for the whole world. Quantitative restrictions are even suboptimal for individual countries. They introduce a lot of international price volatility and even introduce domestic price volatility. As we see in Africa, many countries have corn price, all sorts of interventions, and corn prices, maize prices, which are much more volatile than world market prices. Protection reduces world income, so countries can be made, everyone can be made better off by reform. And of course, rising protection, once you go down that path and someone introduces a 45% tariff on something else, it doesn't end there. The path of retaliation can lead to the sort of spiral that we saw, downward spiral we saw during the 1930s. Insulation, price insulation, very, very attractive. Put on an export restriction when world prices go up. Attractive to the individual policymaker, but it's beggar thy neighbour. It can't collectively reduce domestic volatility. All it can do is redistribute it. And it appears that in 2006, 2008, it didn't redistribute it in a helpful way. It did not successfully reduce poverty by insulating the most vulnerable. Collective action can do a lot. And the ban on QRs, that's at the heart of the GATT disciplines, is hugely important both for individual countries and for the world. Limiting and reducing protection levels, that's the basic approach of the GATT, and the WTO helps to reduce these costs that I mentioned. And disciplines on price insulation are present, although you need to look a little harder at the system. What's been happening in terms of developing countries and their policies and their relation to the trade system? When developing countries were small, as they were not long ago, their markets didn't matter for their trading partners. But developing countries have grown dramatically, as David showed in his table on trade and calories. Another important thing is that developing country policies have changed very rapidly. If you just go back to 1992, 93, just after the Warsaw Pact countries had become integrated into the system, high-income countries exported 60% of world agricultural exports. About 40% of that was exports, 40% of total world agricultural trade was exports from one rich country to another. The vexed exports from the US to the EU or to Japan and so on. And trade negotiations focused on those issues in particular. Developing countries were only about a third of world imports. Move forward 20 years, which is a blink of the eye in the pace of trade negotiations, as David mentioned. Developing countries are now 60% of world exports, nearly 60% of world imports. The part of world agricultural trade that drove all those earlier negotiations, rich country to rich country, is down to 20%. If there is to be collective action that effectively uses disciplines on policy autonomy to reduce the adverse impacts on the rest of the world, developing countries have to be involved. That trade-off between disciplines and policy space is there very strongly. The other thing, policy patterns also matter. The historical pattern of trade policy, agricultural trade policy in developing countries, was taxation of agriculture to help support low food prices for urban consumers. This was something very carefully documented by Anne Kruger and her colleagues in the 1980s that showed for the first time that massive pattern, that pattern of agricultural policy. But that reduced exports, encouraged imports. It wasn't something that mercantilists in the WTO, the GATT system, worried about. But developing countries have moved very sharply to positive protection over that time, over the last 25 years, and very strongly still insulate. Price insulation is still very, very strong, as it was in the industrial countries until the Uruguay round. We look at Kim Anderson's results through to 2004, and we're currently in the process of updating these numbers through a consortium of international organizations, but this shows the story: high agricultural protection in the industrial countries, and very low negative protection in the developing countries through until the 1980s, and now a move into quite substantial positive protection in developing countries. That's a very important change because it changes the whole dynamic of negotiations, which are about improving market access. So price insulation, thank you, very strong insulation against price shocks. That gives you substantial increases in world price volatility, about doubling the size of the shocks, for instance, in the market for rice, Kim Anderson and I found. But longer term price changes seem to pass through. If you look at the key agricultural staples, world prices are much more volatile, domestic prices much less volatile. Seems like a success until you recognize that much of that world price volatility comes from the insulation, which contributes to those lower, or doesn't actually contribute to that lower volatility of domestic prices. So that the induced volatility of world prices is a huge challenge. Potential policy options, of course, the fundamental dynamics, long, hard grind of development to raise incomes is absolutely central to the process of poverty reduction and raising food security. But specifically, information and market efficiency is important, social safety nets for dealing with shocks, and disciplines on protection and insulation. Improving market information, very important. In 2008, we didn't really know where stocks were, for instance. There's now an initiative, the AMOS initiative, to improve that market information. Market-based price risk management may also play an important role. Futures, options, insurance. There's a huge amount of work in developing countries on that issue. Social safety nets, unlike price insulation, these are individually and collectively effective. Hugely important. Domestic food aid, despite what you may hear sometimes, is exempt from WTO disciplines. There's plenty of policy space for that. Disciplines on protection and insulation. Disciplines on protection, the Uruguay round introduced limits for developed countries. We need a lot more discipline both on developed and developing countries on the level of protection. That proved hugely challenging in the Doha agenda. The Nairobi Agreement, though, to abolish export subsidies is really a major step, because export subsidies are the protection you have when you're an exporter, and they're a source of massive price volatility as well. Disciplines on insulation, don't hear much about this in the discussion, but the abolition of variable levies in the Uruguay round was an enormous step forward. Prior to that, the industrial countries were massive contributors to the beggar thy neighbour problem in food price volatility. The price-based SSM, actually I see a germ of promise there because it disciplines insulation against price falls. The quantity-based measures, which are still on the agenda, make absolutely no sense and could be very damaging in terms of their poverty impacts. I think long-term we're going to need some partial discipline on export restrictions because otherwise importers feel they can't rely on markets, but that's going to be very hard to get. So to conclude, most reform involves agreed reductions in policy space. That's an inherent feature of collective action in this area. Rapid growth of developing country agricultural trade has a huge impact. So little world trade is now between the rich countries, the traditional focus of negotiations. The Nairobi Agreement moves forward on some fronts, especially the export subsidy disciplines, but much remains to be done. Thank you.